The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. How about you?
Oh, not too bad.
I know I'm like a lot of listeners. We thank you so much for helping us to earn money in the market, and Mr. O'Brien also, and what you all do at TFNN. It is absolutely huge. We appreciate it very much.
Well, I appreciate that comment very much, and I'm sure Tom does too. Thanks very much.
All the best to you and your family, man. I'm telling you, we so appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. It makes my day. Thank you.
Okay, buddy. Take care.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Welcome, everyone, to another edition of Breakout Investing on TFNN. Ken Shreve with you. Breakout Investing now airs 5 days a week on TFNN from 3 to 4 Eastern. The number to use to get through, same as it always is, 877-927-6648. If you can't listen to the show live, head over to iTunes. You can always pick up the show as a podcast, and don't forget you can listen to all TFNN programming on your smartphone. Just open your smartphone browser, type in tfnn.mobi. Open your smartphone browser, type in tfnn.mobi. Short URL. Click listen to the TFNN stream. It's right there in front of you, easy as pie. Don't forget to check out Tiger TV as well on the homepage of tfnn.com. Channel 1, the show is carried live, and it is archived each day on Channel 13. And with Tiger TV, not only can you listen to the show, but you can also look at charts live right along with me. A little bit of selling pressure here. 1 hour left to go, a little less than 1 hour left to go in Tuesday's session, and indices are near session lows. I'm not sure what has, kind of checking headlines here, don't see anything specific. See the dollar strengthening. That's not good for the market. Also had comments from Philadelphia Fed Bank President Charles Plosser. Not surprising. He's an inflation hawk, not a big fan of quantitative easing. But he said that QE3 that was recently launched by the Fed wasn't necessary, wouldn't work, and is risky. So who knows? Maybe that is spooking the market a little bit. But the S&P 500 near its session low here, down close to 10 points, 0.7% to 1447. See, the S&P has broken through its 10-day moving average. Next likely support level would be its 20-day moving average, down around 1436, 1437. So it is about 10 points to get to that level, and then would be a pretty big pullback to get down to its 50-day moving average. I suppose anything is possible at this point. The S&P 500's 50-day moving average is down at 1408. So S&P 500 near its session low. Let's check in on tech stocks, NASDAQ Composite, and same situation here. It's actually dropping and at its session low as well, down close to 29 points now, 0.9% to 31.31, sitting just above its 20-day moving average here at 31.27. We'll see if it can hold this support level. Volume right now on the exchanges tracking about 5 to 10% higher than what we saw yesterday. Volume Monday on the New York Stock Exchange was below average at 623 million shares. NASDAQ volume on Monday was average at 1.67 billion. So we're tracking slightly higher. If we do finish near session lows and, the percentage declines stay where they are, I mean, this would be a distribution day, no question about it. It would be a higher volume decline. You've got meaningful percentage declines, and the fact that it's happening during the last hour of trading is definitely a yellow flag here. Headed into today, the S&P 500, well, if it closes lower today, the S&P 500 is going to be down in 6 out of the past 8 trading sessions. It hasn't broken down by any means. Like I said, still holding above the 20-day moving average. NASDAQ Composite looking a bit more vulnerable here. If it finishes lower today, you're looking at 5 declines in the past 8 trading sessions, I believe. Or is that, no, 5 in the past 7, something like that. But NASDAQ Composite still holding above its 20-day moving average, but not by much. We did have some economic data today. Earlier today, the Case-Shiller 20-city index for July showed that home prices rose for the fourth straight month to reach their highest level in nearly 2 years. This again according to the S&P Case-Shiller 20-City Composite Index. The index rose 1.6% in July after a 2.3% gain in June. For the third month in a row, all 20 cities in the index recorded price increases. Tomorrow we've got new home sales data for August. New home sales are expected to come in at 380,000 from 372,000 in July. Certainly the home builders have been a pocket of strength in this market for some time. Let's take a look at shares of Toll Brothers. Volume was pretty heavy in this stock at one point today. It was outperforming, but it is off its session high here, down close to 1% to 35.79. This is an extended stock here. You had a breakout over $29 a share back in late June, and then another breakout over 31 here in August. So these home builders need to come in a little bit. It looks to me like they're ready to pause and consolidate gains here. See the 50-day moving average for Toll Brothers down around 32. It's almost a $36 stock right now, so yeah, maybe comes in 5-10% from here and possibly get another opportunity to buy it here. Let's take a look at Pulte Group, PHM. Also in the home building sector, it's down near its session low, trading around 16.17, down 3.5% on the day. But Pulte Group, like many other home builders, under a lot of accumulation. See these big blue volume bars down here, above average volume price gains. Or at least gains where volume rose significantly from the prior session. This is what a stock under accumulation looks like. So the last meaningful breakout for Pulte Group was again back in July when stocks bottomed. We had that follow-through day in the market in late July. That's when a lot of home builders really started to take off. So Pulte broke out over $11.50 a share, very extended in price up here as well. Kind of an ancillary housing play. Let's take a look at shares of Zillow. Boy, this one is getting hammered today after a recent breakout over $44 a share. I've been very vocal about growth prospects at Zillow. I'm a big fan of its CEO, Spencer Raskoff. Good pedigree there, but stock is getting taken apart today, down 5.9% to 41.77. This is unequivocally a failed breakout. It is still holding above its 50-day moving average, but cold comfort to longs who might have bought the breakout over 44. But Citron Research at it again, according to the flyonthewall.com. Remember, Citron Research was the a short-selling site that had negative comments about Questcor Pharmaceuticals and its multiple sclerosis drug Acthar gel. Well, Citron Research had negative comments about Zillow today as well, just questioning the company's business model and things like that. I'm not sure how Citron Research has as much pull as it does in the market, but when it says something negative about a stock, it tends to move sharply lower. So we'll see how Zillow responds after today's sell-off. Also today we had a really nice reading on consumer confidence. What's a little bit disturbing about the market action today is that, we were holding on to gains for the better part of at least during the first half of trading, up 0.3%, 0.4%, pretty steadily throughout the day. We started to bleed a little bit in the second half of the session, but stocks were higher because we got another great reading on consumer confidence from the conference board for the month of September. The consumer confidence index increased to 70.3, the highest level since February, from a revised 61.3 in August. That was a much bigger jump than expected. Economists were looking for a reading of 63 from an initially reported 60.6 in August. Coming up tomorrow, more economic data on the way, weekly jobless claims, durable goods orders for August, the third estimate to second quarter gross domestic product. That's supposed to be unchanged from the second estimate of 1.7%. We'll also get a look at pending home sales on Thursday. And then Friday, another busy day with personal income and spending data for August, the Chicago Purchasing Managers Index for September. Boy, that manufacturing data have been pretty miserable over the past several weeks. We'll see if the Chicago PMI has any good news. And then finally on Friday, another reading on consumer confidence with the final reading for September from the University of Michigan Sentiment Index. Let's take a look at shares of Apple, also showing disturbing price action today, but not a broken stock by any means here. In fact, I have a stored chart of Apple also with the 10, 20, and 50-day moving average. We'll see that Apple is now trading below its 20-day moving average, down 14 points. A lot of selling in this stock over the past half hour, 45 minutes, something like that. Right at its session low, down 14 points, 2% to 676.69. So the fact that it's underneath its 20-day moving average, a bit of a concern here. The last I checked, volume was tracking about 10% lighter than Monday, but I wouldn't be surprised to see the pace of volume picking up. I can't tell right now, but the fact that it's underneath its 20-day moving average is potentially problematic. Its 50-day moving average, which is should be a good support level here, down at 645. So remains to be seen if the selling in the market is going to be pronounced enough to bring Apple down that far. But if you're long the stock, certainly have to be thinking right now about taking some partial profits. And I am currently long this stock for my Ultimate Growth Stocks model portfolio. So we'll watch it. We'll watch it for the rest of this week and decide what we want to do. I'm not a big fan of watching profits dissipate. On the one hand, I'm a trader, but I also like to be an investor too. I like to buy a stock and hold it for a big gain. So at this point, the fact that it's below its 20-day moving average now is a bit of a concern, but with a decent cushion in the stock too, you don't want to be too quick on the trigger and sell a big leader like this too quickly. So we'll decide what to do here in coming days. But if you do want to check out a free trial to Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. You can click on the Newsletters tab right on the homepage, then click on Investment Newsletters. You'll see me in the carousel there. Just scroll down. You'll also see Try Ultimate Growth Stocks right on the homepage. 30 days free to see how I approach the market. So unsettling action in Apple today. Taking a look at crude oil, down, not by much, 91.37 a barrel is the official settle for crude oil, down 0.6%. Gold up just a little bit, 0.1% to 1766.40 an ounce. Dollar index at last check was on the rise, up only 5 ticks to 79.57. And let's check on the yield on the 10-year note here. We'll check the 30-year when we come back, but bond yields lower again today. Yield on the 10-year note right around 1.68%. 877-927-6648. Stick with me, folks. Coming right back in about 4 minutes. Breakout Investing on TFNN.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. 877-927-6648. Wave of selling comes into the market here during the last hour of trading. Indices near session lows, with the Dow right now down 59 points, 0.4% to 13,499. Tech stocks underperforming. NASDAQ down 28 points, 0.9% to 3132. And the S&P 500 down about 9.5 points, 0.7% to 1447. Volume on the New York Stock Exchange and NASDAQ is tracking a little bit higher than what we saw yesterday, so if it stays the way it is, we would be looking at distribution day, higher volume decline number 3 for the NASDAQ Composite and S&P 500 in recent weeks. Still not enough to derail this market, but certainly the action in Apple today is a bit disconcerting, and some other leaders under some pressure as well. Let's go to Michael, Alexandria, Virginia. How are you doing today, Michael?
Good, Ken. How are you?
I'm fine, thanks.
Good, good. I was a little concerned about Coors. Today's been sold with heavy volume. What do you think?
Well, Michael Kors, I'm a big fan of the recent new issue. Of course, it was just Friday. I mean, hello, volatile market, right? Friday after the close, or was it earlier this week? Just within the past couple of days, they came out with very bullish earnings guidance, and the stock. It was actually last Friday where the stock gapped up and rose sharply, and then you had a share offering today. The company, it was a previously announced share offering, but it priced at $53 a share, which isn't a concern to me. My short take, Michael, on Kors is that I'm going to wait to see how this reacts around key support levels. I'm looking at a daily chart right now in Tiger TV. Certainly under a lot of selling pressure. I'm not real keen on its price action, but you have to remember there are a lot of stocks going down here. The market is really kind of coming in hard here. So I would say if it breaks through the 48.27 level, which is its 50-day moving average, I think it could officially be called a broken stock. But as long as it holds above that 50-day moving average, it's looking vulnerable, but I can't call it broken yet. You know what I'm saying?
Yes.
So, and what I'm going to do also is just pull up a weekly chart here, because the 10-week moving average is around 50 and a quarter. So, actually it's probably, if I'm looking at both moving averages, I'm probably going to pay more attention right now to the 10-week moving average, which is at 50.41. So if it breaks precipitously below that 50.41 level and I continue to see heavy volume, probably going to have to get out of this name with a smaller profit than what I was hoping for. But I would say that the 10-week moving average at $50.40 is the key price level to watch here.
Right. And I had one more also. Mellanox is looking bad too today.
Yeah, Mellanox, I've been talking about Mellanox on the show. I think it probably gave up its 50-day moving average today.
It did, yeah. It sure did.
Yeah. So this one is under pressure as well. But, there are a lot of stocks out there, Michael, that, the market, we had the follow-through day in late July. We know there are a lot of stocks out there that have been running higher for quite some time. Mellanox is just one example of many stocks out there that really needs to consolidate gains for a little while, take a little breather. It's only been doing it for a couple of weeks, and, at this point, it's probably a pretty good chance it's gonna take out that $95 price level, I would say. It's at 101.87 right now, and a little bit of volume in the stock today. So I'd be careful trying to catch stocks on sale here. I'm not really actively looking to put money to work in an environment like this, because the market does feel a little bit heavy. But like I said, if you've been listening to the show, I'm not expecting a meaningful sell-off here in the market. The worst case scenario is that indices like the S&P 500 and NASDAQ Composite maybe pull down to their 50-day moving averages, which would be another 3% from where we are right now.
Okay. All right. Thank you, Ken.
Okay, Michael. Good to hear from you. Appreciate it.
Thank you.
Yeah, there's some unsettling price action, no doubt about it. It never ceases to amaze me. Sometimes I'm preparing to come on air and the market looks fine, and then I'm on air for 5 or 10 minutes, and then all hell breaks loose. But that's the market these days. Again, taking a look at the NASDAQ Composite here, let me pull the NASDAQ Composite back up in Tiger TV, and we'll see it's sitting right at its 20-day moving average. So it's under a lot of selling pressure today, no doubt about it. Down about 1%. Looks like it could be a distribution day, but we don't need to give up on this rally quite yet. If you start to see how higher volume declines become very prominent and market leaders really start to roll over in heavy volume, that's a problem. Starting to see a little bit of it, but certainly not enough to get totally bearish here. All right, folks, stick with me. Headed into break number 2, 3. Lost track already. We'll be right back, though.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act, as space is limited. Sign up today.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Let's see, we was going to check bond yields here. I think we check the yield on that 10-year note. Let's do it one more time here, though. Bond yields have been under pressure. Looks like, 7 days in a row down for yields here. The yield on the 10-year note lower today to 1.68%, and then the 30-year bond, let's check on that, also been under pressure, down in 6 out of the past 7 sessions. It's near its session low here, down, let's see, 2.86% looks like the yield. It wasn't that long ago where that 30-year yield was all the way up to 3.1%. thereabouts. So bond yields under pressure. Again, mentioned gold up just a little bit today. Interesting, the U.S. dollar index really isn't isn't doing a whole lot today. At last I checked, it was up about 5 ticks or so. And you'd think that the dollar would be strengthening more than that, but yeah, still trading around 79.57. Let's take a look at the U.S. dollar index here. This is as of Monday's close, but it has been in rally mode for past 5-6 days or so, but still has a lot of overhead supply to work through. So whether the dollar's, is it ready to start a meaningful uptrend here? Some will say yes. I will say no at this point. A lot of leaders under pressure today. Mentioned shares of Apple down quite a bit here. Interesting news on Apple today was that IHS Supply, or a technology research firm, kind of broke down the iPhone, got an idea of who some of the suppliers are for components, but they said that the 16-gigabyte iPhone cost Apple about $207 to make, goes up to $209 for the 32 gigabyte model, and $230 for the 64 gigabyte model. Component suppliers making a return to the iPhone 5. You've got Samsung. They do the applications processor. Qualcomm, wireless power management chips. Let's see, any other names here? Texas Instruments does the touch screen controller. STM Microelectronics, gyroscope and accelerometer. Cirrus Logic, of course, with the audio chips. Avago Technologies, which does the communications chip. Let's take a look at shares of Avago. Remember at one time that, it was always these headlines, well, which suppliers do you want to own, and when the new iPhone comes out. But a lot of these stocks are really laggard stocks. I mean, here's Avago Technologies. Look at Avago today, down 4.5% to 33.06. This is a broken stock. Check shares of Qualcomm, which is also an iPhone 5 supplier. Not doing too bad here, still above its 50-day moving average, but down 1.1% today to 62.99. STM, that was STM Microelectronics, another iPhone supplier. You see this stock has been under selling pressure for 7-8 days in a row, sitting at a key support level. SWKS, a lot of these iPhone suppliers really are doing nothing now. Skyworks, look at Skyworks, had that really bad day last week, precipitous decline, down another 1.75% today to 23.61. So always let price and volume kind of dictate your buy and sell decisions. That is a key strategy that I use for my Ultimate Growth Stocks model portfolio. And I sent my weekly update out earlier today. And for subscribers that are listening right now, really the goal is I don't want to be too quick on the trigger. On the one hand, I'm okay with letting some profits get smaller here, and I'm okay with that as long as certain model portfolios are not breaking down. If they are breaking down in heavy volume and violating key support levels, I will cut them loose. I'll either cut them loose for a profit, or I will protect capital when necessary. But when I go through all the charts today of all my model portfolio holdings, I see every single stock that is still holding above support. Yes, I've given back some gains in recent days, but I could sell for a decent profit here, or I can be patient, let the selling run its course, and realize that I could have big market leaders. So, do you want to take a 10% gain in a stock only to see it 6 months later up 50%, 75%? That's really personal preference, but that's the strategy that I'm using right now. I'm not going to, unload any stocks in the model portfolio until the market tells me they are broken stocks. And right now, I do not have any broken stocks in the model portfolio, which is why I am holding. All right, taking a look at some earnings reports today. Let's take a look at Red Hat, RHT, enterprise software maker, earned 28 cents a share, flat from a year ago. Sales up 15% to $322.6 million. Stock is under a lot of selling pressure today, breaks below its 50-day moving average. This was looking a little bit wishy-washy ahead of earnings. Red Hat right now down 4.1% to 55.16. The earnings were mostly in line with expectations. Sales were mostly in line as well. Subscription revenue at the software maker rose nearly 17% from a year ago to $278.8 million. The rest of its revenue came from training and other services that rose slightly to $43.8 million. We also have shares of Paychex earnings as well. This is a company that provides payroll, human resources, employee benefits outsourcing solutions. Paychex comes right down to its 50-day moving average, finding support for now, but a lot of sellers in the stock today. It's down close to 3% to $33.40. Earnings up 2% to 42 cents a share, in line with expectations. Sales were up 3% to $578.2 million. That was below expectations. And finally, we mentioned FactSet Research Systems at the end of yesterday's show. FactSet under a lot of pressure. Looked like it was going to try to take out a swing point of 104.81. That would be the high in its chart right here, but FactSet, one of many names under selling pressure today. It's down 4.2% to 98.49. And I don't have the earnings data with me, but I know they did come out with earnings, and obviously the market is not responding positively to FactSet's earnings. Here are earnings, as a matter of fact. $1.18 a share. That was up 11% from a year ago, nicely above expectations for $1.06. Sales came in close to $208 million, up 8% from a year ago, but several quarters in a row of decelerating earnings growth at FactSet Research Systems. Again, when you're looking at earnings and sales growth in recent quarters, it's always good to see acceleration, or at least just good solid percentage year-over-year growth. So sales growth has been decelerating at FactSet Research Systems. This is a company that provides financial and economic information to the investment community. All right, let's take a look at some other headlines today. Research in motion. Don't look now, but CEO Thorsten Heinz was at a developers conference in San Jose, California. RIM gave attendees a look at its new BlackBerry 10 mobile operating system. CEO Thorsten Heinz also said that RIM's subscriber base now tops 80 million, up from 78 million, the company reported in late June. So RIM, one of the sole bright spots in the market today, even though this is a technically damaged stock. It is up 27 cents today, 4.2% to $6.57. After the close Monday, Caterpillar came out with weak guidance, not for 2013 or 2014, but for 2015, if you can believe it. But shares of Caterpillar under pressure, down 3.9% today to 87.29. This is another broken stock in the market here. Could try to hold that 86.92 price level. That's its 50-day moving average. It's still below its 200-day line at 96.05, but very cloudy fundamentals at Caterpillar. Again, after the close Monday, the company cut its 2015 profit outlook, saying that weaker commodity prices would result in a larger than expected decline in demand. Also weak revenue guidance from Tesla Motors. Boy, this company makes beautiful cars, no doubt about it. The electric car maker is down 9.6% today to $27.71. Company cut its revenue outlook this year, citing a slower than expected rollout of its Model S sedan. If you've ever been in a Tesla showroom, the cars are beautiful, but again, great company, not a great stock here, under a lot of selling pressure. Big sellers in the stock today. Tesla also announced a follow-on stock offering of just over 4 million shares, but said CEO Elon Musk was interested in buying up to $1 million of those shares. Let's see if Walgreen is hanging in there today. Walgreen doing well, flirting with a breakout here, flirting with a technical breakout, I should say. It was added to Goldman Sachs conviction buy list earlier today. check in on shares of Google, see how Google's doing today. This has been just a tremendous price run, but a nasty reversal in Google today. The stock hit an intraday high of $764.89, now trading pretty much at its session low, down 26 cents to $749.12. Nice article in Investors Business Daily earlier today, talking about how, whether you're a value investor or Google has kind of come back into favor because people look at, the challenges that Facebook faces and Groupon and Yelp and some of these other social media companies. Google's internet search model is all of a sudden looking very, very appealing. It's very consistent. It's very reliable, and there are so much money has come into Google since July. It's again working on 11 straight weekly price gains here, and definitely the stock has regained favor. But with this market sell-off late in the day, Google all of a sudden looking very vulnerable here. Here's a look at a weekly chart for Google. Recent breakout over $658.59. Again, working on 11 straight weekly price gains, and you can see no damage at all. I mean, you'll see a reversal in the daily chart, but Google's still holding comfortably above its 10-week moving average at 685. I would consider Google to be a broken stock if it were to take out this 10-week moving average with conviction. That story has far from played out. It still has, about 65 points to go to get down to that 10-week moving average. So it could come down there, find support. I expect that will happen with Google. Google is expected to grow annual earnings anywhere from 15 to 20% over the next 2 years. That's this year and next year. A similar price move to Google. Well, let's look at a weekly chart for Rackspace Hosting. Hard to find stocks out there showing 11 straight weekly price gains, or at least working on 11 straight weekly price gains. For Rackspace, it had 10 straight gains into this week. It's here's that weekly chart. You can see it is trading lower for the week. Right now, Rackspace down 65.66 is the last price on Rackspace. It is a provider of managed hosting services, sort of a cloud computing play, but big price move. This stock is not broken either because it's still holding above its 10-week moving average at 58.04. On a weekly chart, I really, you can see how much I pay attention to this 10-week moving average. This is really kind of the key thing in the market right now. All these big growth names that have run up, they look like they're ready to pull back. Some are going to come down to the 10-week moving average and find support, and others are going to break down. And when they break down in heavy volume, that just means that, hey, they're kind of losing mutual fund interest. Fund managers are taking profits. But those that find support at the 10-week line, and again, a name like Rax, a name like Google, a name like Michael Kors that we talked about earlier in the show, I suspect that all three of these stocks, and plenty more out there, good chance that they'll eventually firm up at the 10-week moving average. The only way they won't is if, hey, this market all of a sudden gets hit with a lot of really bad headlines, whether they're out of Europe, whether it's a third quarter earnings season that is just way worse than what people are thinking, might be economic data. I'm not expecting that to happen, but I take pride in the fact that I adapt to any situation. I don't get too, even though I'm still bullish on this market, if the market tells me to, be conservative, starts telling me to take profits in some names that I currently own, I'll do that. I'm not going to argue with the market. All right, let's check in on shares of Domino's as well. Great chart here, but very questionable fundamentals. Domino's is trying to break out technically here. It's up 50 cents off its session high to 35.89. Let's take a look at its weekly chart here, and we'll see a nice technical setup. Actually, a beautiful chart here. Trying to break out over 36.47, hit an intraday high of 36.68, but weakness in the broad market late is getting in the way of this breakout. This is a good example. Charts can look really solid, but the fundamentals at Domino's have really taken a turn for the worse. You've got sales in its latest quarter reported back in July. They were down 2% from a year ago to $376 million. So Growth slowing here. Still should be able to grow annual earnings by about 10-15% over the next couple of years. But fundamentals kind of shaky here. Good technicals, though. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Yeah, kind of a crummy day for the markets taking shape here. The selling, really just came all at once. A lot of it is being attributed to what the president of the Philadelphia Federal Reserve Bank said in a speech to financial market trade groups in Philadelphia. Basically, what's not surprising here is that Plosser, Charles Plosser, is a noted inflation hawk. He's never been a big fan of these QE quantitative easing, so I'm not so sure that the selling is it spooking the market, perhaps, but this is nothing new from Charles Plosser. So basically said that QE3 wasn't necessary, it's not going to work, it's risky, said it's not going to see much benefit to growth or employment. Well, I mean, we've already had 2 rounds of quantitative easing, and the unemployment rate is still above 8%, so we know that it's not immediately helping the economy. It's a stabilizing force, quantitative easing. So what we heard today from Charles Plosser from the Philadelphia Fed is nothing new, but that is what is that's why the market headlines are attributing his comments to market weakness. But we are near session lows right now. The Dow Jones Industrial Average now down 85 points, 0.6% to 13,473. The NASDAQ Composite down 39 points, 1.2% to 3121, and the S&P 500 down 0.9% to 1443. Let's check in on shares of Apple. Definitely disconcerting price action in Apple today. It is now down close to 16 points, 2.3% to 674.84. There was some distribution in the stock yesterday, even though it did manage to close near its session high. But Apple under a lot of selling pressure today, and volume on the exchanges, it is getting heavier. Okay, another yellow flag here. Looks like we'll get an unequivocal distribution day for the major averages. Volume today is tracking higher than what we saw Monday, about 15% higher than Monday's level. So headed into today, only 2 distribution days for the NASDAQ Composite, 2 for the S&P 500. Professional selling, institutional selling, higher volume declines have been very well contained in this market. Now, if they start to become prominent, one day is not going to kill this uptrend. I just got through saying before we went into the last break that, I'm looking at the stocks in my Ultimate Growth Stocks model portfolio. Have I given some gains back? Absolutely, especially today. But what I know is that the leading stocks out there, even after today, really are not showing meaningful sell signals. That Apple broke underneath its 20-day moving average today. Yes, that's concerning. So it might be not a bad idea to trim here, but we'll make that decision in coming days. What we do know is that it looks like unequivocal distribution today for the major averages, and you have to be ready to adapt here. At one point today, healthcare stocks were doing very well. Let's take a look at Amgen, see if Amgen is holding on to its gains here. Not doing too badly. You can see firming up in its 50-day moving average. This is a super strong stock, showing good support at the 50-day line. It's still up 87 cents today, trading right in the middle of its range for the day, up a little more than 1% to 83.78. And let's check in on shares of Edwards Life Sciences, another stock that's still holding above its 50-day moving average here. Not a broken stock yet. Coming up after the close, earnings from Copart, CPRT, and also J-Bill Circuit, JBL. That's after the close today. And then coming up Thursday, Discover Financial Services, Research in Motion, Nike, Micron Technology. Thursday is going to be a busy day of earnings. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern, folks. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing.